tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, realestateSINY.com's mortgage and economics reporter. The mortgage rates climbed back up their hill this week. The 30-year fixed rate is now at 4.66%. The 15-year fixed rate is at 3.75%, and the 5-year adjustable rate is at 3.63%. The mortgage rates haven't been this high since 2011. These jumps back up are from some optimistic news in the economy. The main area this optimism came from was the employment sector. On Friday, July 5th, the Bureau of Labor Statistics had released the Employment Situation Summary Report for June. According to the report, there were 195,000 jobs added to the economy in June. This number is more where economists would like it to stay around to see the economy getting stronger. The unemployment rate had remained unchanged at 7.6%, even with the significant amount of jobs that were added to the economy. Along with June's employment, they released updates of jobs added in April and May. For April, they had originally released that there were 165,000 jobs added, then had revised it last month to 149,000 jobs. And now they have given us a final update of 199,000. As for May, they originally released that there were 175,000 jobs added to the economy, and this month they updated the results to 195,000. Next month they will give us the final number for May. The financial markets have been pretty volatile lately, but seem to have been stable and increasing this past week. In the stock markets, the Dow Jones and the S&P 500 both increased throughout the week. The Dow Jones was at around 14,900 on Wednesday, July 3rd, and had increased to almost 15,300 on Wednesday, July 10th. The S&P 500 had gone from about 1,610 to about 1,650 those same days. As for the interest rates, the 10-year U.S. Treasury bond yield had gone from 2.52% to 2.70% those same Wednesdays. Now that we have looked at how the economy itself is doing, let's take a look at how Americans see the economy. On Tuesday, July 9th, Gallup.com posted their weekly Economic Confidence Index report. The results from the polls this week show that Americans' confidence had actually gone down. The results from the poll on Americans' net ratings of economic outlook in the U.S. came in with 51% of Americans thinking that the economy is getting worse and 45% thinking that it is getting better. Last week, 49% of Americans thought the economy was getting worse and 46% thought it was getting better. With this week's poll's results, it gave Gallup an index of -6 for their net ratings of economic outlook, compared to the -3 it was last week. The poll on Americans' net ratings of current economic conditions in the U.S. came in with results of 32% of Americans feeling that the current conditions are poor, and 20% thinking that they are excellent or good, creating an index of -12. Last week, this poll had results showing 31% of Americans seeing the conditions as poor and 20% seeing them as excellent or good. The index for last week was at -11. With these two polls, Gallup.com created their weekly Economic Confidence Index, which is now at -9, compared to the -7 it was at last week. With the mortgage rates continuing to rise, we see less and less people applying for new mortgages, and especially refinances. The Mortgage Bankers Association released their weekly mortgage application survey on Wednesday, July 10th. The survey's results are from the week ending July 5th. The Mortgage Bankers Association Market Composite Index had decreased another 4% from last week, when it had gone down 11.7%. The Mortgage Bankers Association Refinance Index had dropped another 4% as well from last week, when it had went down 16%. Most of the mortgages being applied for recently have been refinances. This week, 64% of all applications put in were for refinances, but it has been going down each week. The Mortgage Bankers Association also released their Mortgage Credit Availability Index on Tuesday, July 9th. This report showed us that the index had increased from 108.9 in May to 109.8 in June. As each month passes, the index increases, meaning that the mortgages are becoming easier to be approved for. The last thing we looked at this week was a press release from the Center of New York City Neighborhoods and the New York City Department of Housing Preservation and Development, which was put up on Wednesday, July 10th. This press release talks about New York City's Mortgage Assistance Program. The Mortgage Assistance Program is a program for homeowners who are facing foreclosure. If you are approved for this program, they provide you with a zero-interest loan for an amount up to $25,000. The nice thing about this loan is that you don't have to pay it back until either you refinance, sell, or transfer your home. If you don't refinance, sell, or transfer your home, you will have to pay the loan back after your first or second mortgage term ends, whichever one is longer. This program has already helped 100 homeowners avoid foreclosure, and it will continue to help more people. If you would like more information about the Mortgage Assistance Program, you can go to www.cnycn.org/map. Since the Federal Reserve had caused some commotion in the past weeks, we have been seeing some stability this week. But with employment increasing and the financial markets increasing, the mortgage rates have been rising along with them. We won't be seeing the mortgage rates go back down too much, so make sure you check out our mortgage blog each week on trendingsiny.com to never miss a beat. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, subscribe to our YouTube channel, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestateSINY.com.